Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, it's Sunday, 10 a.m. We got our weekly close coming in tonight. I'm expecting a little bit of action as we approach. We'll see that we are still currently sitting outside of this red descending trend line, all the way from the $20,000 high down through, our $12,000 area, $10,000, and then we were able to pop above it. And then you'll see also we're below, the yellow parabolic trend line, and we essentially retested it as resistance, potentially putting in a double top and divergence on multiple oscillators on the weekly time frame. So at this point in time, we found support on the 55 and the 8 on the weekly time frame, and we're still above them, as well as the descending support. So it doesn't look bad here. Coming up on our weekly close, we also have one more week until our monthly close, which is where I expect to see the true volatility roll in, as that's going to be also the half, the monthly, the quarter, and represent potentially what could be like the worst economic quarter in history. So we'll see how that all pans out, but I'm expecting crazy volatility as we come into this monthly close. And like I said, all these other more substantial time frame closes. So that's what we're really focused on at this point in time. But if we do take a look over at, actually we'll pull up the oscillators real quick. We did get back above our red slope line on the TJD TDMACD, and we are currently green on the histogram. So if we stay above it long enough, we will flip that over blue, and we get continuation of the trend to the upside potentially. And then as far as the blue, we're losing strength on this, but we're still to the upside. We're gaining strength on the purple to the upside, and we're focused mostly on this monthly to see basically, is the orange going to be able to find support on the yellow and continue to the upside with this trend and potentially get like continuation? Or is this going to be, like a potential like support that gets rejected and then falls through, and then we break back down and get that downside? Now we did get the highlighted red area on the weekly, but that doesn't necessarily mean we're just going to dump and start selling off. When we got that at these moving averages, that heavy consolidation, that was for like basically a month, and then we got the first burst up followed by multiple months of continuation and massive price action. Basically like tripled our value in that time frame. Went from like 5,000 to almost 15,000. So if we got a similar move right here around that $9,000 range, we could potentially get up to all-time highs, but doubling our price to tripling it would be like 30,000, almost 27,000. So we are at a decision point, and that's why it's important right now not to just get wicked out on one of these like moves inside. But the weekly candle does look decent at this point in time. It was looking worse than it is. We did take out the previous week's low and then close, and now here we are at the low. So based on this, I would expect selling to come in back down to this 8,800 range, and then potentially as low as the 8,500 range. But at this point in time, we could find support here and get continuation to the upside. But once again, I just want to urge everybody, it's not financial advice. I'm not your financial advisor, but we're at a decision point in the market where we could potentially, get follow through of like, 50% or more to the downside, or like multiple hundreds or thousands of percent to the upside. So a couple percent here or there is not that important in the grand scheme of things, which is why I'm not like urgently rushing into or out of positions right now. Now this is what I'm more focused on, is on the daily time frame. We do have our shorter moving average confirmed below our second time frame moving average. So the red is below the yellow, and then price action is below both of those. So we've got the confirmed cross to the downside. When we crossed to the upside was all the way back here on April 5th. So we crossed to the upside on April 5th at basically like 6650, 6700. And now here we are, you know, months later, crossing potentially to the downside, or we did confirm the cross to the downside at 50% higher in price. So we can now get, you know, potentially like up to an 88% retrace of that action, of that price action move, and still maintain like a positive move upwards. So we would be essentially taking like 2 steps up and then 1 step down. But percentage wise, you know, it's larger. So at this point in time, though, we do have red slope on the TJD TDMACD. We have red histogram or a violet histogram on the TJD TDMACD. It's at the 0 line, dragging down. Price action is below our shorter time frame moving averages. So we would expect at this point in time to just continue stepping down, first to like that 88.50 range again, and then next down to our 200 at 85.24 on the daily. We do still have our daily golden cross confirmed, so we could come down as low as our 200 simple and get down here at 82.38 and still have no problem maintaining this cross to the upside. So, and then we have the 377 and then the 528. At that point, if we go below 8,000, we've lost all of our substantial moving averages on the daily and would expect continuation. Now this is what we have to pay attention to on the daily as well, is right now our blue is getting ready to cross above our purple to the upside. We still have our orange above our yellow, and we're maintaining positive slope on it. So as far as the daily is concerned, we still have a positive trend to the upside, and we got our cross back here with the hard sell up at 9,800, and now here we are at 93.50, getting ready to potentially get our buy. Now we do have to be careful though, because we almost always get like a reflex pump when we get that cross, but we have that those moving averages straight above our head, so we're going to run straight into resistance. But what I suspect will happen is, as soon as we get this confirmed cross right here, if we don't just like immediately start selling off and dump down here to like the 8,800, what's going to happen is we'll put in like a nice green candle, a nice big one. Essentially it'll be the other half of the BART of that sell-off right there. We potentially come up, you know, as high as, I think everyone is very bearish right now in the market, and I think if we popped up here as high as like 98.75, maybe like 9,900, even if we got up to like 10,000, 10.1, failed to take out the parabolic SAR on the daily but came up and tested it and then sold off, I think we'd be able to get that massive momentum to the downside to break down to like that $8,000 range. As where if we just like start selling off and creeping down, I don't think we're going to get that momentum. So I think more likely than not, what's going to happen is we're going to get that big green candle push in here, maybe even today, push us up, possibly even a week continuation to the upside. Nice green candle come in, and then I think it's going to sell off and close the monthly you know, negative or bad looking. Poorly, bad. Monthly bad. But I mean, that would give us basically, if our weekly closed, you know, positive right here, we could close right back up here at like 97.50 on the weekly, get no resolution at that same spot, get that wick back up here, look like it's going to continue up, and then sell back off, and we just put in a green, red, green, and then like another red comes in afterwards, and that's our monthly coming in and sells back inside of this area right here, or sells back to it, and then we have a whole another month now before we get resolution on that as well. But that's going to give us essentially like the divergence right here, where we have like the high, and then we have a higher high, we have the high on price action, and we have a lower high, and then same right here, we have our high right here, and then we have a higher high, but we have lower high. And you'll see it on like a bunch of different oscillator indicators. We have that divergence on those longer time frames. So what we're expecting to play out is eventually like a long, drawn out, you know, sell off. And again, I think the initial point that we're focused on for that sell-off is first going to be that fib 236 at 82.50, and then also like our 382 would be next for that 70-200 range. But the 0.5s come in confluence right here at the middle of the channel, and then also right here for around like, it's right around like the 4th of July, right around like 6,400. So we'll see how that looks if we break down here like powerfully and come down to the 0.5s, come down to the center of this cone right here that we've been oscillating inside of, confirm this was in fact like distribution, and we're going to continue oscillating inside this range, come down to the center point, the 50% of this move and the 50% of this move all lines up perfectly in that same spot. So at this point in time, I think that it's very likely that we get, you know, basically something like that. That's going to come in right here, and that's going to give us like the perfect buy opportunity if we do get that price action like I'm expecting. So well, there you have it, guys. Crypto Trend Trader. We got our weekly close coming in, 1 week till the monthly close. Expect big time volatility not only in the next like 8 to 10 hours, but also over like the next like week or so, as we do put in like this this next weekly and monthly, the quarterly, and the half all coming to a close. And this is where you potentially see those big points where you get like the stop and reverse. So pay attention to it. I'm Crypto Trend Trader, and I'm out of here.